Thank you so much. And now we're going to call up our panelists for the venture panel, Jasmine, Ray, and Mike.
Oh, sorry. Thank you.
Like with the Kurt presentation, there'll be some time for questions at the end. So definitely prepare some things, and we're excited to get things going. Okay, so we're going to start with some rapid fire. So 10 seconds from everyone, introduce who you are. You can maybe go a little over 10 seconds, and then we'll get to another question after that. So let's go from right to left. Ray, get us started here.
This is cool, 10 seconds, so he's making a VC do an elevator pitch to a room in 10 seconds or less. Okay, so my name is Ray Sharma. I'm from Toronto. I run Extreme Venture Partners. It's a seed stage venture fund. We've done 120 deals or so across 3 funds. I just launched a fund in Africa. How about that?
Great job. Jasmine.
Really not good at speaking fast, but I'll try. Jasmine, I manage the digital asset strategy at Recharge Capital. I used to run the asset management business at BlockFi, and before that, I worked in traditional hedge fund and private equity funds. And I just moved from Los Angeles to New York 3 weeks ago.
Welcome to New York.
The new resident.
My name is Mike. My name is Mike Hennessey, Silicon Valley veteran. Been there 30 years. Enterprise sales background, Oracle, search engines, databases, all of that. I am an investor, LP, investment committee member, and advisor to Unbounded Capital.
Cool. Well, thanks everyone for joining us today. And Ray, and this is for everyone. We're going to try to keep it to a minute or less, but just into what everyone really cares about. What is the single use case that leverages blockchain technology you are most excited about today?
Okay. It's going to seem contradictory, but some of the most boring applications, like I should have mentioned in terms of my area of expertise, is really in the application layer. So when I look at the most basic applications, like there's this government in Africa that's using it for just basic real estate records. It's a massively scaled application right out of the gate, super basic, super simple. They don't have an existing enterprise software system. It's not displacing anything. It's an easy, blockchain is just a feature checklist. And it just, you're gonna, if you're a government official, you're gonna put it on the checklist. But there's other boring applications as well as pharmaceuticals. There's a company that I'm involved in that's working with the Dream Hotel on taking NFTs and making them into memberships. So they're working with Dream in Las Vegas or Los Angeles or something, I'm not sure, but not this hotel. But that's like an application that actually is kind of boring, and I like boring right now at this stage of the game, so manufacturing applications, really basic stuff, stuff that's high volume, high transactional volume, high value of goods being shipped. So, sorry, that went over 60 seconds.
Okay. Jasmine, what's the single use case you're most excited about?
There are so many use cases. I will look for something that's less boring, I guess. So I met with a company yesterday. So they're trying to democratize the fine art industry by enabling sales of fractional ownership. I know many teams have tried the idea, but this team specifically, they not only figure out the business model, but also figure out a framework that can work under current regulatory environment by putting in place the right broker-dealer, transfer agent, ATS, and also doing the right regulatory filings. So the fine art industry is huge. So it has around 65 billion annual trackable sales. So I believe once the pathway is cleared to work under the current regulatory environment, we'll see lots of activities in the space.
Cool. Mike.
Micropayments. I mean, I think if you look at most of the world, 2 billion people make less than $2 a day, and they're unbanked or underbanked. And I think being able to have micropayments changes everything. It'll change advertising and commerce, and we'll see it later today. We've got like Haste Arcade has this thing called ILP you'll hear about, where you have leaderboard payments that go to top players. You'll see Nifty Jigs with their rebranding today, where they help facilitate the micropayments with game developers and users. Built by Gamers is using it to reward their fan base and the fans that use their technology in their platform. and of course hand cash, which is the wallet that's enabling this background technology, so
Yeah.
micropayments.
So, Ray, I know you didn't talk about it right now, but in our emails beforehand, I know you're pretty excited about the metaverse. So this is a little more exciting than manufacturing.
Yeah, it's like
What-
total opposite. Yeah.
What makes you excited about the metaverse?
Okay, so this is a little bit different type of thinking, but every economic bubble has unintended consequences. And we've just experienced a multi-trillion-dollar bubble. And yeah, there was a lot of negativity, I gotta say up front. If you were part of any of those token offerings, if you were in those Discord servers, you experienced the bullying, you hold forever. My daughter did 3 of them, and I got to see through her eyes how she was being judged based on how intense, how rabid her enthusiasm was for the offering. This is like classic pump and dump type of mechanics. This is wrong, this is bad. So I'm not trying to, diminish that phenomena, but the implications of an economic bubble of that magnitude is that a whole bunch of speculative investments were able to be directed into areas that wouldn't have otherwise got funded. Not dissimilar to 99-2000 when the entire backbone of the internet, all these undersea cablings, WorldCom was being valued as a multiple of PP&E. I used to be a Wall Street and Bay Street analyst. We used to value the companies based on how much they were putting on infrastructure on the ground, causing a massive explosion of build, which when the bubble burst, we were sitting with an overbuilt infrastructure, and we can now focus on the application layer, the evolution of the system. So there was this massive bubble, and we have this unbelievable unintended consequences that will be studied for years. It's still not fully, we're right in the middle of it. Now, if we take the other side of the metaverse, this is going to sound cliche. I apologize in advance for everyone in the room about this. But if you've seen that movie, Ready Player One, and if you've seen that scene when he goes from his, not so good life in the future where people are, disenfranchised, a lot of poverty, huge discrepancies in wealth, and their life in the virtual world is just more pleasant. It's just more enjoyable. And that scene where he gets onboarded into the oasis, I don't know what's in Zuck's mind, but that's probably the aha moment that he's like, wow, I want to be the guy who creates the oasis, right? He's got these islands of communities that are massive, right? Just monsters. He's a logical person to try and become the oasis, plus the balance sheet and that profitability. But let's just think about, what does the metaverse represent? And I just want to say, there's been some, things that have happened with this, with Zuck in the media and stuff like that, that has affected people. And I get your skepticism. I'm thinking the next several years out. I'm thinking venture funds, just like they're being dedicated to space applications and space startups, there will be many, many venture funds dedicated to this, because in the metaverse, what I foresee is that basically everything we see in the real world that is of value when it comes to time or economic value will migrate to the virtual world, the metaverse. But the problem is we have these disconnected islands, these different experiences. You got Fortnite over here, you got Second Life over there, you got Instagram over here. These are islands of communities. How do you connect it? See, the thing that Nintendo did through massive success with their platforms is with that character, that Wii character, you have the same avatar, you got virtual goods that are translating between experiences. Now, extrapolate that times 1 billion, and that's sort of what we need, is we need all our virtual goods to follow us. We need to be able to have the avatar in different types of experiences. And that means that there's an amazing opportunity to rebuild all those significant things of value into the metaverse. Now again, there's a platform issue, a lot of issues, there's an islands of connectivity. I think that's what the investment thesis is behind what they're trying to do over there. So I apologize for the cliche aspect of this, but what I'm really trying to say is that everything in the real world is going to be either replicated or will live independently in this meta world. And what will happen is sometimes the two worlds will have cause and effect, and in some cases people will live independently. And I'm not a big guy on social and stuff, so I'm not trying to say, yeah, this is great for society, let's go live in a virtual world, this is awesome. But come on, let's just think about it. Think about the normal distribution curve of our global population and what people are experiencing outside of this room, outside of Manhattan. This is a bubble in itself, right? And so when you think about it in the context of that movie and what was kind of being the vision there, that if you've never seen the movie, please do. If you don't want to watch the movie, I'll tell you the 4.5-minute clip. That's all you need to see, is that onboarding point to the metaverse and how the islands of experiences connect.
And Ray, are there any examples, or maybe one that stands out to you, of a company building a metaverse or building on a metaverse that you're excited about?
Well, like I think a lot of people in this room, they're all looking at these different picks and tool shovels type of investments that'll be little aspects of the metaverse. And then there's some bigger plays, these platform plays like Meta, like even things that are coming out soon with like that will cross many different systems. The problem with this whole thing is that the investment thesis. That's why I said the venture funds will be in 2-3 years, because it's still kind of being sorted out, these investment opportunities. In Canada, like we have Ethereum, right? You know, we have. I'm not like best friends with Vitalik, but I know his dad. I had lunch with him. We have a lot of cool stuff happening up in Toronto. It's so you could easily make a lot of claims. BSV's doing amazing things, but you know, those are what come to mind.
Cool. And before moving on the topic, Mike or Jasmine, do either of you have a company that's like building something in the metaverse or building a metaverse that you're excited about?
For us, we're not specifically focused on metaverse, but definitely in DeFi. So our Omakase labs are building solutions to make the space more accessible, and also tools to make the user experience more frictionless, and also to kind of do complex transactions. That also powers a lot of activity in the metaverse.
Yeah. So good segue. I was going to ask you about DeFi, and what, if you had to communicate to the audience, makes you so excited about DeFi that you're spending your time and energy as the general partner at Recharge?
Yeah, it's interesting Zach asked me the question because we're a very engineer-heavy team, and most of our developers came from SushiSwap, so they've been in the DeFi space for a very long time. So actually nowadays, when you look at the DeFi technology itself, it can do anything that we see in the traditional financial services system. Honestly, like everything, right? And then also, back in the months of May and June, during the market crash, with the falling of Celsius and 3AC, we actually see that these DeFi platforms are much more robust and resilient in such a market condition. Even when we talk about Terra Luna, in the crash, of course, the economics didn't work because of these.
Not everyone here might not know about Terra and Luna. Do you want to just give them a little background?
So yeah, so Terra is a blockchain, and it's famous. It's famous for this algorithm stablecoin UST. So instead of backed by fiat currency or security, it's backed by its native token called Luna. So when the market's great, it's great. It kind of powers each other. But once the stablecoin loses pack, and it caused the aggressive inflation of the Luna token. So basically, people, if you look at this as a super Ponzi, then everyone's racing out the door at the moment. So when you look at the crash, of course the economics didn't work because the fundamental flaw of algorithm stable coin, but the technology is actually good. So when I talk to a lot of traders, arbitrageurs, they can trade smoothly all the way down to zero, and the system's fast. So it's very funny because when you talk about the technology itself, it's good, right? So of course, I'm very excited to be part of the force to make this environment more mature, and so then people can do activities with more like safety protection, understanding more of the underlying risk behind it, and also this whole system just needs better infrastructure.
And so specifically, what is like the one opportunity, company, or protocol that you're most excited about today in DeFi?
So I'll have to say that's something we're working on ourselves. It's called Operator. So it is to enable users to interact directly with smart contract. So it's kind of a universal interface. So it's not really, I'll say, now that not many people directly interact with smart contract, they all go to these centralized financial institutions. So in future state, we hope that once you tap into your, putting your credit card, debit card information, then you can easily move US dollar to the DeFi space and do complex transactions.
Okay, thank you, Jasmine. So Mike, what was it initially that made you focus so much of your time on startups leveraging blockchain? Tell us the story.
Yeah, I mean, I feel sort of silly because I should have figured this out earlier. I mean, the first time I learned about Bitcoin was 2012, and it took me 3 to 4 years to understand this concept. And when you're in New York and you talk to investors, they tend to think about investing in hedge and the stock market. They think about fiat currencies. So all the conversations around what is Bitcoin? Is it any of these things? All of these things? But what I finally realized, it's not any of those things. What it really is a second coming of an internet protocol. So during the first internet phase, I've been in Silicon Valley for 3 decades. I sold white label search and commerce solutions to Fortune 500 companies. And what I realized is the first internet wave was really just websites connected to each other through hardware, Ethernet, and software layers that shared information. So you just went to a website and you gathered information, you learned about a topic, you went to another website. Today, what the blockchain does is it provides that same utility, but it also includes identity and payments built into it. So really what blockchain, and people call it different things, but blockchains, tokens, the combination of those things together, that ecosystem, really what it is a more advanced internet that enables us to do things on a global scale, quicker, faster, with trust and identity all built in. So when I realized that this looked a lot like the internet, and I saw the Ciscos, the Stratacoms had to come in, they provided all these solutions to telcos. It was only when those infrastructures were built out that we had the Yahoos come in. And so then mobile and obviously Facebook, and Google came on top of that. The same thing's happening today in the blockchain sphere. And the reason that I get so excited about this is I'm seeing this is like watching a sequel to a movie, but I think that this current incarnation of blockchain and these protocols, these use cases, will change everything. It'll change advertising on the web. It'll change payments on the web. It will include micropayments. It will include all sorts of things, cross-border payments. So the application is so broad that it's hard to define. But what I'm realizing is that really this is just a better version of the internet, and it will make the previous boom of internet technologies look like a child's toy.
So Mike, you for Unbounded, you made lots of angel investments, venture LP investments. What are the major differences you see in the founders that are using blockchain in some way versus those that don't?
Well, I'll be the first one, people that know me say I'm a straight talker, I'll be the first one to say, if you're using blockchain just to raise money and get a higher valuation, or you think it's a buzzy word, don't. There are businesses out there that don't need a blockchain solution, there are those that do. So I think, for me, it's also more global in approach. So there used to be the old joke in Silicon Valley is the venture capitalists would only invest in a company that they could ride their bicycle to because they didn't want to go travel. And just in Unbounded, for example, we've invested in founders from London, Spain, Moscow, Norway, the US. So I think this is a more global phenomenon, and I think the founders come from all over. So I think from an investor perspective, that adds some challenges, but it also, I think, makes you realize how global this platform really is and can become.
Yeah. So Jasmine, to you, what are the main differences of investing in early stage tokens versus early stage companies?
I'll say token investments are more dynamic, more versatile, but also can be very risky as well. So when you look at the traditional equity investment in VC, you focus on the fundamental kind of value creation, value capture of the business. It's more of a ownership play. But when you look at token investment, it has everything, all of that factors, but also added liquidity management on the top. So it is pretty tricky with the lockup period and also timing the market for an exit because you don't want to hold a token for a round trip to the moon and back, right? So it is also like the underlying tokenomics can be very complex. So it requires investors to have a lot more technology, just technical background to even be able to evaluate it.
What's an example of where like the tokenomics have been complex, but you've liked the project or idea?
I would say, well, I really don't want to name any projects, but I would say I rely heavily on our engineer team to look at the tokenomics. So we're pretty lucky that we're very engineer-heavy fund. So, but sometimes even for me, I'm from the traditional finance background. To me, like two DACs could just look the same and have the same similar business model, but behind it, it's set up very differently.
And what are tokenomics for those in the room that haven't heard that term before?
I'll say like, I'll have to think about how to define it. So it's like an economics model of how tokens work. If you, or anybody has a better definition for tokenomics. Like, I would say the economics model of how token works with the economic interests of the business, how to work with the equity shares. Yeah.
Okay. Cool. So, Ray, have you made any crypto investments yourself?
Yes.
So how would you describe those investments between investing in crypto versus like startups using blockchain?
Well, when you asked me this question before about the specific names, like that's the reason I said the picks and tool shovels is that you know there's right now this sort of environment of unit economics is like all the rage on the street, right? It's been going on for a year, 2 years. We need to be able to analyze the unit economics on a cohort basis, look at it from a demographic basis, look at it on an activity basis, right? So when we look at that sort of situation, if we look at it from that perspective, the companies that require a lot of capital that, you know, are going to require like, you know, many, many years to get to positive unit economics, those are the ones that will be the big plays that are the answer to your earlier question, but they're still to be determined because right now we're in a different type of part of the cycle. So yeah, there's like there's a whole bunch of little investments here and there that are amazing. And in Toronto, because of a lot of the stuff we're doing in mathematics, the Fields Institute, which is in that Good Will Hunting movie, is in Toronto and stuff. So we're doing a lot of really interesting things up there. So I don't know if that answered the question particularly,
So if you could just speak more to, so you've made crypto investments, you've made company investments in startups that are using blockchain. What do you see those differences as between those types of investments?
Well, I'm with Mike. The chain is sort of, kind of doesn't really matter. It depends on the application. What we want is we want liquidity. We want there to be liquidity on both sides of the chain. We want there to be some sort of, you know, inherent things that have to do with brand, right? You know what I mean? We just want to execute our application. Whatever is the right chain for it, we don't care. We'll support all the chains. In IP version 6, when they start, you know, when that gets rolled out in critical mass, you'll start seeing the support for all the chains, right? So, you know, those are the things we look for. We look for, you know, the activity on the network, you know, the basic things like the amount of application developers, how many new apps came out per year. Those things are researchable, right? And then from there, you can see where there's a few entrepreneurs that have the right unit economic model that can play the long game in a monstrous market, but it's really challenged right now, short term. So yeah, that's picks and shovels have always been a good bet in this type of environment.
Yeah, Zach, I'll take a crack if you don't.
Yeah, sure.
So one of the things that I've noticed in Silicon Valley, it used to be that you would get an angel round, you know, a few $100,000. You'd raise a seed round, it was $1 million to $3 million. You'd raise a Series A that, you know, these numbers keep creeping up, but that was 5, 10, 20 million. And so each one of those investment tranches in a company takes up, you know, you're giving away some equity from an entrepreneur perspective. With the tokens, and I'm not suggesting this is the right method, but crypto entrepreneurs had access to liquidity earlier in that cycle. So there were certain situations where maybe they only raised a friend and family round, or maybe they only raised a small seed, and all of a sudden their companies were worth $100 million plus because of the liquidity from a token. And what ended up happening is they retained more of the ownership of the company. Some of them set up foundations that were akin or aside of that capital table. So what it ended up doing is providing more liquidity to the founders. They could skip one of these tranches. But you also have to be careful because these are balance sheet transactions. And if the coin crashes, they could find themselves in a worse situation. But I think it made a little bit of the traditional path of raising along a little lumpier and a little
Yeah.
distinct.
Yeah.
With non-crypto companies, that was never a concern.
And-
See, the one thing about tokens is that the tokens are evolving to have some sort of utility value, right? And the utility value now, like I was on the plane down here with a guy who was a partner at Polychain. He's got his own fund. He's one of my old associates, right? And there's a new token offering that's coming that will be a venture fund, right? So you can have a net asset value. You could have a derivative value to the economics of the token. So disk storage, processing power, all these things have tangible value. And so art is great. Like I was on the board of our National Museum, ROM, for 6 years. Art's amazing, but it's a really strange world. Like how do you value art, right? So that's a bit of a unique animal in terms of derivative value because it's sort of what does everyone else think it's worth. But the vast majority of the development now in the here and now in terms of the token side is things that actually have real utility,
Okay. Mike, what are your thoughts on the benefits and challenges of a US-based VC fund that invests globally?
I mean, the mechanics of it, obviously, the laws, there's some legal things that have to happen, especially for follow-on investors in the Valley. They want to see a deal that looks a certain way in a structure that is set up a certain way. And sometimes international entrepreneurs don't understand that. So you have to educate them and teach them. But I think the biggest difference is cultural. I mean, I don't mean to offend anyone or their children, but I've never met a 22-year-old Stanford grad that didn't know everything. and it's amazing how much I learned from them in our first meeting. Whereas I think entrepreneurs from Latin America or Turkey or other places, they're eager to learn, and they're sponges, and they just want to learn about things. And so for me personally, I enjoy working with foreign founders because there's a lot more value that can be added in just protecting them from themselves in some circumstances, whether it's a contract or an agreement or signing a term sheet that's maybe taking a lot of the equity away from future hires. I love to be able to help founders navigate those difficulties, and I feel like foreign founders need a little bit more help in that realm.
So we got 2 more rapid fires before the Q&A. Which geography are you kind of most excited about? So you can't pick the whole world. Continent's the biggest that you could pick. Ray.
Africa is a slam dunk. United Nations says half of all live births presently are from the continent of Africa. It's trending to 2/3. If you look at what's happened in Lagos alone, in the last 20 years, the population's grown from 500,000 to 24 million people. Fastest growing super city on the earth. And it's reflective of a mega trend happening in Africa. COVID was terrible, but there was also unintended consequences, like the ed tech phenomena was so well funded. There's been thousands of companies funded in ed tech, especially in India. There's no continent that I believe that'll benefit more from that than the continent of Africa. A lot of my focus is in Lagos because Lagos has critical scale on its own. Lagos, if it was its own economy, would be the 4th largest economy in Africa. So Lagos is big enough. It's like just focusing on Manhattan. And the last thing, most important thing, is there's research that says half of all mobile wallet transactions on Earth are happening in Africa. They figured out the micropayment thing ages ago. You go down to Makoko, the city slum, they've been doing microtransactions for many, many years. And one of the implications of them having so much experience and all this stuff is like, do you remember when there was a time when the Chinese messaging systems were sort of playing catch up to all the major sisters like WhatsApp, and then next thing you know, WeChat has payment integrated and you're doing games. I think inevitably that's what we're going to see on the continent, is that just by virtue of experience and serendipity, that we're going to go from being, sort of whatever it is now to being the leading innovators when it comes to that. So sorry, that was a...
Jasmine, which geography are you most excited about?
Oh, okay.
I feel like I'm cheating if I say I think DeFi is its own nation.
That would be cheating.
It really doesn't matter for us, but I'm a big fan of Africa as well. I just took a trip 2 months ago to Rwanda and Uganda, so definitely
Cool.
big on Africa.
Are you working with any African startups right now?
Not at the moment,
Okay.
but hopefully we'll have opportunity to work with them in the future.
Cool. Mike?
Having spent the last 20 years in Brazil and Mexico and Argentina and seeing them grow, I'm going to say Vietnam.
No.
Yeah,
What-
I think
what in
Southeast
particular?
Asia, I think,
Yeah.
so I see a lot of parallels, and I've always said this, that entrepreneurs from Cleveland, Ohio are very similar to entrepreneurs from Santiago, Chile. Anyone that's not in Silicon Valley outside of that vortex, they behave in similar ways. So what I'm looking for is countries where the demography and the geography and the age group is growing rapidly, and I think Vietnam, Malaysia, India are all going to go through, in Pakistan as well, are all going to go through these same growth spurts that we saw in Brazil over the last decade.
Okay, one last rapid fire question before Avery will come around with the mic and we'll have a Q&A. So Ray, what is one prediction you have about the future of blockchain that you think most people in the space do not share?
Man, this is supposed to be a rapid fire answer too. I'm already running out of time.
It's okay, it's okay.
Let me think about that one for a second.
Come back.
Okay,
I can give it a try. I think most people don't share. I would say blockchain isn't always the answer. So, I think that people don't say that, especially blockchain events. But I'm excited to see that, as the space gets more mature, people will have a balanced view on investing in the space and, what business cases actually make sense to use blockchain, or others, sometimes just implementing database would be more efficient. I felt like right now.
so in terms of like a prediction, what would you say is a prediction you
I-
have for blockchain that other people might not have?
So, yeah, I'll have to think about. I would say I would see investment kind of shifting from like investors will be having a balanced view on making investments and kind of not. Like I would say, not last year was a year that everyone jumped on the same thing. I don't see that coming back anytime soon. Yeah.
Okay.
I'll go on a limb. I think every single person on this planet will use blockchain in some capacity in the next 10 years.
Okay.
Businesses as well.
Ray?
I was thinking, I think a lot of the things I've already said are kind of a bit out there, like.
Which is the most out there?
Yeah.
I don't know, man. I think like probably, no, I'm not sure. I think everything I say is out there.
Okay. So you heard it from Ray himself. So we got time for some questions. Who would like to ask any of the panelists a question? Okay, we got Zach over here. You want to just wait for the microphone? Be there 1 second. We are not live stream, but hopefully some people will watch the recording and.
I really want to know the answers. So.
Yeah.
I heard you guys collectively say things like picks and shovels. I usually call it rope, right? The rope behind that can tie up a bundle of sticks. What may be an area for entrepreneurs in the room or who watch or hear in that rope or pick and shovel where you're not invested today, but you do see an opportunity?
I think I can do a 2 for 1. I can maybe give you a partial answer and hit that one too.
Great, 2 for 1.
Like the BSV guys have done an amazing job in terms of thought leadership when it comes to IP version 6. If you've seen some of the stuff they put out there, like I wrote a research report when I was at Credit Suisse many an age ago about IP version 6. So I happened to have dinner with a gentleman who was also on the protocol committee, and if you look at what's happening, what IP version 6 can do, it's phenomenal. It might, like, because you know how you mentioned earlier about internet, like almost like a Bitcoin being an internet protocol for, like, that's what we sort of need. We need something, IP has been stable for decades. We need something that's really stable and that we can use on the base layer. Like internet protocol, the specification has not changed in forever. And it wasn't necessarily the best technical answer because there was things like asynchronous transfer mode and there's other competing network solutions back then. So I think there's going to be some amazing opportunities if the world heads towards an IP version 6 or maybe an IP version 7 where you not only can support all the chains and support all of the currencies, but you can simultaneously, if you can support all of the virtual assets and do all those things, like, I have a virtual business, I have a virtual real estate, then there's going to be a lot of startup opportunities around that and helping enable that. And that's not here right now. There's some countries that have shifted entirely to IP version 6, and there's a lot of countries which are still at IP version 4. I have no idea what happened to IP version 5, by the way. So.
Okay. Well, thank you for the question, Zach. Rick?
Apropos of what you just said, you guys are VCs. Any of you not deathly afraid of hardware and semiconductors and deep tech? I guess you're all deathly afraid of it. Okay.
No. It's. Go ahead. I'll let these guys talk.
No. I am definitely afraid of it. Anything that requires manufacturing outside of this nation, I think, is.
You're a manufacturer, right? You invest in
Yeah.
manufacturing? Yeah, so.
Yeah.
Yeah.
So
Yeah, go ahead.
why aren't you deathly afraid of hardware, I guess is the.
Well, because there's been changes in the hardware model that allows companies to innovate in hardware. So okay, first of all, we're not a non-traditional VC. We fund services companies, we funded game studios, and we're not afraid of the hardware companies. But you have to be able to play that long game with capital and funding. All the traditional things that people argue, but it doesn't necessarily have to be that way. NVIDIA is a multi-hundred-billion-dollar corporation that uses TSMC. Right? They virtualize so it's sort of totally doable. It just depends on business model. So I'll give you an example. There's a company out of Montreal that does this meditation headset. They've hooked up with this global manufacturer of headphones, and so they've worked out a deal where it's basically on consignment almost. It's a very friendly working capital deal. They're basically a software company that's virtualized the hardware. So it's possible. I don't think we should write off. Semiconductor companies, for the longest time, you needed like $50 to $100 million to bring it to market. And so that scared a lot of VCs. We had semi-VCs. Then telecom equipment, you'd need $200 million to come to market for that kind of stuff. Think about what Elon's done. See, the reason why Elon's phenomenal is he's got this capital moat. Who can go up onto a stage and pre-sell $1 billion worth of goods like him and Steve Jobs? But what he's done on the capital side is ridiculous. So that's the thing, is when it comes to those companies, what I look for is entrepreneurs that are not only good entrepreneurs, but can play the game of the capital game, if they need more capital.
And I'll say there's a great firm out of Los Angeles. I think they're called One World. They did the One Wheel, that skateboard. And they also provide debt financing. So they're hardware focused, so in the multiple stages of the process. So I'd definitely contact them.
Yeah.
And, oh, sorry.
Yeah, also, I want to mention that at Recharge, we also have a semiconductor fund where we
Oh, cool.
reinvest heavily on the hardware as well.
Cool.
So hopefully see some synergy.
Well,
Price has actually come down from 50 to 10 million. And
Yeah.
there is the $250 billion CHIPS Act, just giving some tailwinds there.
Thank
Yeah.
you, Rick. And we're actually going to be announcing a hardware investment in the coming weeks as well from Unbounded. So generally software, but sometimes hardware. Any other questions we have? Kurt.
Uh-oh.
Oh, boy.
He doesn't need a microphone, but give it to him anyways.
So this is sort of a general question about VC and tech specifically, but people always tell me, well, the people that don't know me tell me, Kurt, investment's going to move toward liquidity. But in something like BSV specifically, where we can have, just last week, 35 million transactions in a day, and I look at that and say that's a world record, and people are like, yeah, but how much U.S. dollars were transacted? What was the liquidity that moved? What was the capital that moved? And genuinely, I talk to VCs and they're like, well, it was only, what was that, 60 grand? Like, what the hell? Like, why do I care about that? So I'm curious, how do you take a technology where the fundamental thing is micropayments and it needs to be billions of transactions a day before we start to throw real big capital numbers? How do we bridge that gap between, hey, how do you create more capital and liquidity and all of this stuff? Like, how does a VC treat that? What would be a better way to pitch that as an idea and say, hey, it's a lot from a tech standpoint, but it's not a lot of dollars right now. How do we get there?
Well, the transactional volume is a stepping stone towards the value volume, because if you looked at crypto, I think you mentioned it in your talk, Canadian company too, by the way, just keep plugging Canada. But in the beginning, that was a tremendous amount of the volume, but it provided the beginnings, if you will. So same thing with your network, right? And then eventually over time, as there's success stories, we're all human beings, we gravitate towards stories and narratives, right? Just like you did on your speech there. So once we hear these big success stories that come out of your ecosystem, it has an effect. And VCs, we tend to be, sometimes we try, some of us try to be ahead of the curve, some of us try to do the less risky thing and follow where there's existing economy. And with what's happening in BSV, we have, right now, that's phenomenal. That statistic's a phenomenal statistic. And let's see where it goes from here. I'd love to see more application developers in that ecosystem. I did check it out when I was doing that speaking gig in Dubai about how many devs were out there, and that's the number. If I looked at a KPI, I would look at that KPI. These are soft KPIs. Another soft KPI is time, right? How much time are people spending on a network as a proxy for value? But in this case, it's that.
I would answer that a little bit differently. I think it's fear-based, both for investors and customers. So I'm a sales guy. I'm used to being close to the customer. When you start to take away business from existing customers, people pay attention. And then the VCs are afraid that they're going to miss out on something. So to me, it's not the general numbers that matter. It's more, you're taking away business from Venmo. Like if Handcash gets 2% of Venmo's customers or 0.5%, they start to pay attention. If your application takes away from the existing miners or it takes away from a native business, people will pay attention. And the numbers are irrelevant in my view.
Avery, got one more question over here. And Kurt, I would just make a quick response is people need to make money. So whether it's taking away customers from Venmo, number of transactions, like if you think theoretically that's essential for the next wave of business, which of course we and many people in the room do, that's great for us. And if we're right, we'll make a ton of money from being early. But what's going to move the needle is when one of the companies using that blows up, and we're trying to find those companies here.
So what's happened to your pipeline and the valuations subsequent to Andreessen raising $6 billion, Paradigm jumping in, et cetera?
Let's do a rapid fire and close out the panel.
At the seed level and the pre-seed level, the valuations are remarkably stable over, like I've been doing it for 15 years now, so it's remarkably stable, even market crashes and big market hypes. The total dollar values tend to go up, but I'd say that seed valuation, the deals are just getting harder to get done. The deal volume has slowed considerably in terms of transactions, and there's a bit of a backup happening where there's a pecking order now. Like when I was on the sell side, 6-month time period in which there's no IPOs, you got a huge backlog of transactions, and even if someone was there first, you're going to get prioritized on what deal sells for easiest, right? So, but in the seed world, valuations continue to be pretty stable. Just deals are harder to get done.
For DeFi early stage investment, I would say the valuation did adjust, and we see the numbers going down, which is good for investors. It's like last summer, you might see founders pitching with $100 million valuation without even having a product. So this is definitely a healthy adjustment in our space.
Yeah, and you have to remember, venture capitalists only make money two ways: if your company goes public or it gets acquired. So I look at it at the end and back up. The IPO market is severely affected. And I think if that rolls down, we've got a little bit of a time lag because the average J curve is like 7-9 years for a company to grow. But I'm definitely seeing lower valuations, except for the super hot companies, it's not mattering. But for overall, 20-30% down from where it was.
Yeah, this has definitely been the best time that we've seen at Unbounded in terms of risk reward for early stage companies in the space.
There's one other thing, Zach. There's this guy who's maybe the all-time greatest Wall Street sell-side tech analyst. He did an analysis on the highest correlation coefficient with valuation across all financial metrics. And what he found was the highest correlation coefficient is contribution margin. So it was contribution margin number 1, gross margin number 2, sales growth number 3. But the correlation, what contribution margin is your gross margin less your cost of sales, or less your cost of user acquisition, sorry. So if in up markets, down markets, any markets, that's the highest thing to maximize if you really want to maximize valuation.
Let's give a hand for our venture panelists right here. Ray, Jasmine, Mike, thank you.